What's going on, everyone? My name is D. Anthony with Evolution Traders. In this video, we're going to talk about one of the core principles on how you can become a better trader in 30 days. Now, a lot of people out there will tell you that it's going to take 1, 2, 3, 4, 5 years to kind of, pay your dues into the market, get the right strategy, understand everything about indicators and technical analysis and how to read price action and all of this other crazy stuff. The number one way to become a better trader extremely fast is to understand yourself as a trader. Now, you may have heard this before, and this is not going to be a video that's going to sit here and tell you that if you believe that you can become a better trader, you will. But what you need to do is focus on the process of your edge and trust it 100%. Because I'm willing to bet that around 90% of you out there that are watching this video do not trust your edge 1000%. You are worried about the outcome. You're worried about the market environments and the conditions and the news and the numbers and this, that, and the other. All of that stuff that's giving you those doubts should already be worked out in the back testing of your overall strategy. You have to think about it like this. You need a series and a body of work. Setups. You need to back test them. You need to see, does this actually provide an edge? I want to give you a little bit of a scenario. Do you think that the casinos in Las Vegas or all over the world are focused on the guy who won $1,000 playing blackjack? Are you thinking that they're concerned about the person who just got paid out $25,000 on a slot machine? No. It's the cost of doing business. What that's going to do for the casino is in turn get word of mouth, other people seeing it, hearing about it. You have to pay out, right? You always have to pay out. In trading, you have to take losses. That's just part of the game. That's just a business expense. Now, regardless if you've ever been in business for yourself, regardless if you've ever worked a 9 to 5 for yourself, a company always has business expenses. And I'm not saying that you need to sit here and load up thousands and thousands and thousands of dollars and just continuously lose without ever becoming profitable, kind of that whole market tuition type of thing. I don't believe in that. But what I do believe in is having an edge that you have back tested, that you know is profitable, regardless if it's at a 50% win rate or a 62% win rate. Hell, even a 25% win rate. You may be thinking, how can you only win 25% of your trades and still become profitable? Well, that would mean that your losses are a lot smaller than your wins. So maybe you're holding for 3R, 2R, 4R, 5R. There's systems and strategies out there that allow you to take a very small loss while maximizing that overall potential, right? That measured potential. Now, my systems and my strategies is a little bit more reversed, right? We're kind of shooting for that 1-to-1, maybe, for every 20 points that we risk, we're looking to get around 20 points. Sometimes it can be a little bit more skewed depending on the market environment. Sometimes we're giving up 2 to make 1, but the win rate's going to be a little bit higher. So again, with different methods and with different strategies and different edges, that win rate is completely irrelevant. The win rate only matters when it comes to your edge. So for example, if you're someone who's looking to put on 5 points of risk, but you're going to take 30 points off the market each and every single time, sure, maybe you're going to lose 7 trades out of 10, but if you're someone who's looking to maybe risk 25 points to take 12 points, but you're going to win 75% of the time, that's your edge. You have to follow that edge. Now, a lot of people don't follow the edge well enough to be able to come out on the other side to see the end of the road, because you're expecting the outcome to be good just because you have a strategy. I really want you to let that sink in. A lot of traders tend to think because they have a strategy, right? A quote unquote strategy, or because they use some type of indicator, or they follow this person on YouTube, or they follow this book, whatever it is, that's the end all and be all. right? That you're going to win 95% of your trades, that you're never going to take a loser, and that you're never expecting to take a loser, and that you're almost cherry picking the trades that you're taking because somehow you think that you're smarter than the overall market. You think that, well, if I take a trade at this point in time, I'm probably going to lose. So let me wait for, XYZ to happen and I'll take that trade. The funny thing about trading is you never know what the outcome is going to be ever. Now, all you know is that edge over a block of trades is going to be profitable. And how do you figure that out? Back testing. So all you need to do is simply go back 20, 30, 40, 50, 100 trades, back test, get the analytics, get the metrics, get the numbers, and take some trades. Now, I'm a big believer in working in blocks of 20. I follow the 20 rule as far as it comes to my take profit. That means that if I have a $100 day, I like to use the rule of 20. What's $100 times 20? Because there's 22 some odd trading days in the month. Am I okay with that? If it's maybe trading futures on one singular prop firm account, if I can take out $2,000 out of the market in just one account, what can I do with 10? I put those things in my head. So once you take 20 trades, the way that your edge is designed to be taken, you will then start to see what you can do different. You will then start to see that profitability and that consistency start to grow because you're following the edge the way the edge is supposed to be used. Now, in trading, it's all a game of probabilities, okay? So what you need to focus on is every time your setup presents itself, you have to take the trade without thought, without doubt, without concern, and without worry about the potential outcome. Because like I said, you're going to lose some trades. If your trade edge or strategy or method or whatever it is that you choose to call it hits at, let's say, an average of 60% of the time, that means that you're going to lose 4 out of 10 trades. Now, where those 4 out of 10 losing trades comes, we have no idea. It could come at the start of the week. It can come at the end of the week. It can come all in one day. It can come over the course of 2 weeks. But over the course of around 10 trades, we know that we're going to lose around 4, 4.5, 5 trades. Maybe there's one trade where we kind of break even. Maybe there's a trade where, this week we lost 6 times, but next week we won 8 times. So until you start playing out your edge the way that it's supposed to be taken is only when you're going to see growth as a trader. So if you really want to become a better trader, for example, I'll use the 20 SMA play because the 20 SMA play is a very simple strategy that I use a lot on a lot of accounts, and a lot of my members and Evolution traders also use this strategy. So if we're looking at this particular setup, just leading into the market open, I would hope that most of you traders are already kind of looking at the screens in pre-market at least 20 to 30 minutes before the market is open. If you are, you're going to see that 5 minutes before the market opens, you get a 20 SMA play to the south side, meaning we're looking to take the short. Now, you may think to yourself, well, what about the 5 minutes off the open that sets up and confirms to the long side? Well, if you're following your edge and you're following the strategy, you would still be in that original short trade. Why? Because it never closed above your reason why candle. Now, remember, this is an open marketplace where price tends to fluctuate. And when we're talking about the NASDAQ 100, there's a lot of fake outs. There's a lot of wicks. There's a wide range. A lot of the times you're going to get wicks through levels to kind of sweep price, to kind of trap buyers or trap sellers, or shake out a lot of empty positions for potential better prices for the continuation of the move that has already been set forth. Now, in this particular situation, the move that was set forth was a short position. So this bounce back into the 20 SMA that sweeps the reason why high candle is just a better opportunity for more short sellers to jump in on what was, in a long time, one of the most extravagant days I've seen in the NASDAQ in a long, long time. the amount of red candles and downwards pressure we had on Friday, followed by the absolute complete just V-shaped recovery back to the opening price, was astonishing, right? And I sat back and participated in a little bit of this long position off this 20 SMA play in this area, which actually proved to be probably one of the best areas to kind of get into this long position into the close. Now, mind you, I did not take, the whole move, wish I would have, but I just sat back in awe as the market screamed higher. However, getting back to our example, you should be in this short position going into the bell. Now, I've said it before, and you may have thought it before, and you may have, kind of told yourself one thing or another. Well, I don't want to take any positions off the open. I don't want to take any positions off the bell. I kind of want to wait to see what's going on. Valid points, but when you really talk about edge and you really talk about strategy, why would there even be a thought? And this is something that I'm working on myself as well. Why would there be a thought if I know personally that over the course of 10 trades, 20 trades, 100 trades, that the edge is profitable based on my back testing, based on my data, based on trades that I've taken? I've seen these trades work out perfectly. I've also seen these trades fail miserably. But I know that it works more than it doesn't. Well, how do you know that it works more than it doesn't? That's for you to do on your own. As a trader, you have no system, you have no edge until you back test that strategy, until you sit there and take those 20, 40, 60, 80, 100 trades. You will not know and ever know, regardless of the strategy that you're trading. You could be trading VWAP, you could be trading moving averages, you could be trading order blocks, you could be trading supply and demand. Whatever it is that you're trading that's giving you that edge in the markets, you have to have full confidence in, because you've already done the research and the back test. So if we've already done the research and the back test, the only thing that's left to do is execute the trades as they present themselves. Now, we already know that we're not going to win every single trade. So why would we get emotional or upset or panic about a potential loss and panic about the potential outcome of the trade if we already know that all we have to do is run the system? You see what I'm saying? So I hope all of you guys are kind of following me. This potential short position would have put you into the trade before the market opened, giving you no reason to get stopped out of the trade. Now, regardless of where your system says to take profit, whether that's a 1-to-1, whether that's, selling off half position at a 1-to-1 and holding for 2, 3, 4R, whatever your system says, there's a system built into this 20 SMA play that I'm going to also try to follow a little bit more strict myself, but it's holding and allowing that 20 SMA to act as a guide and a trailing stop loss for us. The way that this originally was brought up and the way that this originally, set forth to be was, once you close below that 20 SMA and you get that change in trend strategy, and as long as we're not closing over or under our reason why candle to stop us out of the trade, we must hold the trade until we close back over the 20 SMA, because now price action is telling us that maybe the short-term change in trend is now over. In that particular case, which would be the best particular case, you would have literally taken from a price of 18,597 all the way down to 18,241. You would have literally almost taken 200, 250, almost 300 points off this move. One singular micro contract would have netted you over $600. Think about that for 1 second. So again, my strategy tells me to take a 1-to-1, okay? And then I kind of look for those next setups. My strategy, the way I personally trade, I like to shave size. I like to take some profits out of 1-to-1, hold the runner, and see if I get 2 to 3R. Typically speaking, I'm never going to hold the trade this long. Personally, I probably would never catch a move for 200 or 300 points. It'd be nice, but it's just not built into my back testing. It's not built into the way that I trade. And that's okay, because I know that the way that I trade, if I follow the system correctly, and if I follow my rules and trust my edge 100% and execute, it will be profitable. Now, again, I'm just like you. I'm human. I do make mistakes. I do jump into trades late. I do chase plays. I do lose trades and want to revenge and reverse. That's happened to me. I've been doing this for 10 years, but I have a pretty firm grasp that if it does happen to me, when I do make a lot of mistakes in one particular trading day, that typically speaking, I'm never trading enough size that's going to kill my trading account, and I'm never going to let that roll over into tomorrow. Now, it may be in the back of my mind, but I'm never really going to let it affect the way that I'm trading for tomorrow, because I know that over the series of 10 to 20 to 30 trades, and then once I analyze that batch, it should be profitable as long as I'm following everything correctly. What I want to leave you with in this video is to truly go through this weekend and start back testing your edge in your strategy. Regardless if you use this method, regardless if you use another method or strategy or edge. But when you get the trade setups that fall in line with the way that you're supposed to trade, all you have to do is execute the trade. Do not worry about the potential outcome, the potential dollar amount that you're going to make and or lose, because remember, size is king. Even when you lose, you should never lose your account. You should never lose your mortgage. You should never have to sell the wife and kids. All of that should already be dialed in place. Now, if you're a newer trader who's still trying to figure things out, start by trading one micro contract. Run your data on one micro contract. You could lose 200-300 points, even on the worst potential day. You could be wrong going long this whole move down and only lose about $400 or $500. Even that is a lot, but who's going to realistically watch a position go against them 200-300 points? Not a lot of people. Not a lot of people. Right? And your edge should give you reasons to get out of that trade. So if you are holding a position that's going against you 100 points, 200 points, 300 points, there's something seriously wrong in your method or your strategy altogether. Okay. So I do have to make that point, because again, if someone's out there thinking, well, what about, worst case scenario, this goes against me 100 points. Well, in the most case, you're going to lose on trading one micro is going to be around a couple $100, which is still not going to be detrimental to your account and still allow you to trade the next day. Okay. So as long as we're sized appropriately, and long as we're sized in a manner that our account can handle, you personally are never, even on the worst day, going to lose your account. It's impossible. It's absolutely impossible to lose an account, especially on one of these prop firms or funded accounts, in one day trading size that your account can handle. So when you get your setup, make sure you're taking your setup and don't worry about the outcome. What we're worried about is getting through, and I like to use 20. I'm worried about getting through the next 20 trades. When I'm done taking my 20th trade, I will go back and analyze the P&L, and only analyze the P&L once I'm done with those 20 trades based on my edge and the setups that were provided in the market. Because if I analyze every single trade, every trade that I win, every trade that I lose, it's doing me no good, because your edge is going to provide a whole flurry of outcomes, a whole flurry of wins and losses and maybe break-even trades. So you can't really get a good gauge on what you're doing right or wrong if you're analyzing each and every single wrong trade that you took. The first trade of the day you took was a loser. You start analyzing and thinking, what could you do better, when you haven't even allowed your edge to play out over a block of trades, which our edge is only profitable after a series of trades. It's not going to be profitable 99.99% of the time, each and every single trade. I hope this starts to sink in, and I hope this starts to make sense. My name is D'Anthony with Evolution Traders. If you enjoyed this video, make sure to like, comment, and subscribe. If it's your first time on my channel, make sure to subscribe. I'm 30 people away from, I think, hitting 6,000 subscribers. I would love to hit that before market open on Monday. I'll see the rest of you guys on the next video.